Hello guys, so today we continue the topic of pump and dump in crypto. Last time we discussed many examples, now we will talk about legality of this scheme and if you can make money on it. So of course, stick to the end of the video, and right now let's roll a quick intro and then we will move on with the topic. So, what are the pump and dump features? So it is relatively simple to identify pump and dump because price jumps have no fundamental reasons and are not synced with the general cryptocurrency market trend. So long-term investors are not interested in projects with capitalizations of some tens thousands of USD. So these startups are the most interesting for pumpers. Now let's talk about features of the pump. So first, you see the sharp price surge and multiple ask orders without any significant fundamental reason. The quotes grow on a single platform without any rise on other exchanges, so that is also very important. Then you will see ads and tips to buy the cryptocurrency on the internet chats, forums and social communities. So it is crucial to see the difference between a pump and a price spike as a result of fundamental factors. So pumps are targeting junk coins, worthless than a cent. They are out of the CoinMarketCap's top 1000 rating. It is difficult to pump coins worth even a few dollars. Much more money should be used to affect the price significantly. So any fundamental rise in price is based on some logic. Investors buy an asset not for the purpose of a quick profit. They see the ground for further development and potential benefits for users. During a pump, the price can spike from 300 to even 500% or more in a few hours. Growth by 1,000 to 3,000 in pump and dump schemes is a common occasion. Fundamental price growth rarely exceeds from 1 to 200%. After a natural spike, the coin price always reverses. But when it comes to pumps, it returns to the previous levels. During fundamental growth, the token price falls only partially and investors manage to get some profit. So dumps and pumps last only for a few hours or a few days. Correction and fundamental growth can last several weeks. As you probably noticed, organized pump and dump has picked up popularity recently. It is based on that everybody wishing to take a part in the project joins the community where organizers share the information about the upcoming pump, concealing until the last what coin will be pumped. Large exchanging platforms don't resort to these activities. First, they don't enlist small cryptocurrencies and it is difficult to pump large ones. Second, they try to restrict similar strategies. However, there are some exceptions. For example, Bittrex and Yobit are one of the largest pump platforms. Telegram is used as a messenger for pump and dump because of its end-to-end encryption. It enables creating private chats and channels, providing its members confidentiality. The largest communities include Pump Notifier, about 27,000 of people. Pump King community, about 14,000 of people. Crypto for Pumps, about 16,700 people, all the way about 9,000 members. And the number of groups participants can change. In practice, the pump looks like this. So the scheme organizers inform about the certain exchange and the cryptocurrency at the scheduled time. Promoters, the scheme participants, immediately start buying the coin out. This is how the first pump wave generates. It is preceded by a simple news bit like an update by the website developers. So then the participant of the first wave lured outsiders investors, which are the hamsters, who push the price higher, and then they make up the second wave. As soon as outsiders enter the market, the group organizers inform through the channel that the coin should be sold. Telegram channels share the information through each other, as the more people are informed of the next pump, the more successfully it is carried out. Pump groups can be open and private, paid and free, as the organizers buy out the cryptocurrency in advance and inflate its rate. Everything depends on the seconds. Paid groups get the information 30 seconds earlier, and by the time the market is entered by the free group members, they may not even suspect that there are paid ones. Paid group members will have dumped the assets and the free ones can only hope for another wave. So pump and dump schemes is immense. To launch a wave, it is necessary to open hundreds of orders very fast, and so the strategy has transformed into automated trading. Most work for traders is done by bots like Moonbot, Has Online and others. There is also a special software, autoclickers, which create an image of large trade volume through multiple orders worth minimum money being opened very fast. An autoclicker average speed is 1 click per 1 to 5 seconds. To start pumping a coin worth 1/10 or 3/10 of a cent, one needs 2.5 to 3 bitcoins, so even common traders can pump such cryptocurrencies. An example of such coin is Sport that is at the bottom of the top 1500 list. Cryptocurrency exchanges don't like these strategies and pretend to be fighting that. For example, Bittrex restricted the rules for calculating the percent change in cryptocurrency quotes and doubled the minimum trade size. But in fact, Pump and Dump yields them commission and increases their popularity. And it is not guaranteed that the exchanges themselves don't take part in the schemes. At least a daily number of pumps doesn't reduce. There is even a new modification, the ICO pump. So, are pump and dump schemes illegal? The question of whether the pump and dump model complies with the law is very ambiguous for several reasons. So, how to prove intentional cahoot of investors? After all, a fundamental price surge due to investors' panic is not a violation of the law, whereas the manipulation itself is. So, how to identify participants of such cahoot? It is easy to do on a well-established exchange market, but almost impossible on the anonymous cryptocurrency market. So, how and whom to hold accountable? So the participants of cryptocurrency pumps are citizens of different countries of the world. It is impossible to hold them accountable. Theoretically, the pump organizers can and should be held accountable, but they should be identified somehow. So, the regulators consider pump and dump schemes to be illegal since the price should be formed exclusively by market methods, and any artificial manipulative actions are a deception of investors. But at the same time, regulators admit that they have no clear legislative grounds for suppressing such schemes in cryptocurrencies. The legal status of cryptocurrency in some countries has not yet been fully determined. Besides, regulators do not have effective tools that could influence pump participants and stop their occurrence. However, regulators are not giving up. In October to December 2021, the Australian ASIC managed to infiltrate one of the largest closed pump channels. But all they could do was to close the channel and warn its participants about possible fines and legal proceedings. So what is the conclusion? The crypto pump and dump strategy for cryptocurrencies is more unethical than illegal. If, as investors, voluntarily invest money on a sharp rise and does not have time to withdraw funds before the collapse, they will not be able to prove the fact of fraud. So now, how to avoid crypto pump and dumps? A strong rise in price is the dream of many cryptocurrency investors, but they believe that new all-time highs will follow the ups in 2017 and 2021. But investing on a sharp rise puts you under the risk of getting into a pump and dump, which always ends in a scam. How not to fall victim of a pump and dump scheme, and what to keep in mind when analyzing the market. So check the listing of the coin on the top cryptocurrency exchanges and the coin market cap websites. On such platforms, startups undergo a scrupulous check and obvious potential scams are not included in the listing. Analyze the startup. Ask one simple question: is the real reason for the price increase? If a startup is one of the leaders in the segment, price growth on the news is logical. If a startup has only a consonant name and nothing to do with the news, then an increase in its price is a pump. Then you should analyze the price chart. If the price follows the general market movement, it is not a pump. An abnormal rise in prices, which is not supported by any informational reason, is a reason to be wary. So try to avoid coins worth a fraction of a cent. Their price is easier to manipulate. Then do not invest in startups that appeared a few months ago. As a rule, serious projects develop for more than 1 year. Another problem of the crypto sphere is fake startups. If the pump is carried out by organizers who are not related to the project, they are likely to promote a fake cryptocurrency. In this case, fraudsters create a landing page, a site without a technological model. They sell tokens in small portions so as not to arouse suspicion. When the price of a cryptocurrency increases, scammers sell their main package of tokens and disappear. A similar boom in cryptocurrency ICO startups has already passed, but fraudulent schemes do occur. The faster the price of an altcoin rises, the higher the risk. If you don't want to take risks, invest in startups from the top 200 of coin market cap and industry leaders, the DeFi, DEX, GameFi, etc. You can also find worthy projects on well-established launchpads, for example, CoinList.io. So, can people make money from cryptocurrency pumps and dumps? Of course, yes. You can earn if you meet the following conditions. First, you have access to private channels that contain first-hand information. Most often they are paid because pump organizers want to earn money, of course, right? Second one is that your platform, broker or your exchange has excellent transfer speeds. Ideally, you should use a trading bot. Your task is to buy cryptocurrency as quickly as possible at the lowest price at the moment you get information on which cryptocurrency is the target of the pump and when it starts. The same robot will allow you to sell an asset at the peak of the demand to the hamsters, of course. In the pump scheme, those who enter the cryptocurrency market too late, at the very peak, lose. Next one is, of course, when you are the organizer of the pump. So if the pump has already started, do not try to make money on it. Most likely you will not have time to earn any more because the asset is sold automatically and almost immediately after the price surge. If you are purposely going to take part in the pump, remember, the biggest problem for investors is greed. The desire to sell an asset at the highest price turns into a loss of investment when the asset depreciates. Therefore, if you decide to participate in such scheme, stick to the following strategy. You need to enter quickly at the lowest possible price and sell 50% of the asset when the price increases by 100% plus some margin. Thus, you return the initial investment and, after going to break even, dispose of the remaining 50% of the asset at your discretion. So, now let's talk about pump and dump bots. In an organized pump, the speed of transaction is crucial. Robots can open and close many positions in a few seconds. That's why they are commonly used in pump and dump schemes. The margin pays off due to the avalanche-like price movement. So the major advantage of algorithmic trading is the speed of decision making. However, robots can make mistakes, which is why the level of risk in cryptocurrency bot trading is still very high. What you can also do is pump and dump cryptocurrencies yourself. The pumping of capital occurs due to a huge number of transactions and their volumes, and each trader can make his contribution to the crypto coin pump. Even though big capital plays the main role in the pump, private traders can also take part in it. The main secret here is buying at the beginning of the pump and quickly selling before the price peak. That's why the speed of transaction processing is so important here. So now, how to save your funds during pump and dump? Well, don't invest in already growing trend. The pump yields a profit to those who create it and to those who manage to enter at the first seconds. There is a chance to gain during the second wave if there is one. Next, you shouldn't base your decisions during pump and dump on the forums or the exchange chat. Accept in advance that you can lose your money and see pump and dump as a gamble, though it won't protect your money, but it will save the most important, which are your nerves and peace of mind. So now let's discuss the conclusion. So pump and dump should be considered as a separate strategy. It does not require knowledge of a technical and fundamental analysis. It's not clear whether this strategy can be called fraud, but the organizers definitely win here. So why not become one? Given the anonymity and lack of legislation, this is not prohibited. The pump object has a stable price, so if the scheme fails, the losses will be only the margins level. The coins is unlikely to fall below the initial price point, right? So all you need to do is find people who are ready to buy. So at the end, I should warn you that you shouldn't treat this video as any advice whatsoever, but hey, either way, I wish you good luck. And if you took something out of this video, don't forget to subscribe, smash the like, ring the bell to see another videos that will come up on the next topic. And yeah, till next time guys, goodbye.